Hi there, Serial Trader here. So I'm going to have a look at the major US indices, and so far September is certainly providing some bearish price action, although it isn't that bearish yet. And you'll see we peaked here on September 2nd, and that was the high, and we've been drifting lower ever since. And that matches up fairly well with September of 2020 over here, where let's see, we peaked on, well, yeah, again, September 2nd of 2020, and we basically declined most of the month into the September 24th day, and then we had a big bounce up into all around mid-October, and then tried for another leg down there towards the end of October. So interesting, just that uncanny resemblance to September of last year, literally the same day, September 2nd, 2020, and now September 2nd, 2021. So that's interesting. Anyone that says that seasonality or little nuances or patterns don't have any meaning, well, I think they certainly do. And there's just a little example of it. But there's also this tendency we've been in several months in a row here. I haven't actually gone through and counted them all, but several months in a row where we go into the third Friday of the month, options expiration. I think today, in fact, was quad witching, and that just means the futures rolled over to the next contract and that sort of thing. But same idea, an expiration day, third Friday of the month, and we declined into that and closed near the lows of the day. But every other time this happened, last several times, that basically marked the low, and we just bounced right back up and continued on making new all-time highs after that. Now, let's get into the. I won't do a wave labeling on this time frame because really, until we actually start breaking this overall uptrend, which we haven't done yet, by the way, because we still haven't even taken out the prior low here at 43.67. So until we start doing that, I'm not going to worry about that longer term wave position that we may or may not be in. But what I will do is go into the hourly chart here, and I mean, I think you can make the case for kind of an ugly impulse wave down. And let's see, we get the 1, 2, 3, 4, 5. You could call that an expanding, I believe you could call that an expanding leading diagonal. Yeah, you could. It's not pretty. So we could call that for the wave 1. That's a clear ABC up for the 2. I think we could go and just call all of this the wave 3. Call this the bounce up in 4. And then down in 5. And I mean, you could even put the 4 over here and just call this a little bit of a truncation, ABC truncated. And if I looked over on the Nasdaq, you'd see that this little move actually did make a slightly new high. So take your pick. But I'll just put it here. That's fine. Now, some things to point out. Okay, let's see if we can get this to show the characteristics of a typical 5-wave pattern. So, okay, what did wave 2 retrace of wave 1? Between the 618 and the 786 retracement. Well, that's quite a typical wave 2 retracement. Okay, so check mark there. What was the wave 1 versus 3 relationship? So wave 1 off of wave 2. I believe we did a pretty nice 1618 relationship there. If I'm not, yeah, look at that. Okay, so maybe even close to the 2. Let's check on that. Okay, not quite. Anyway, we did beyond a little bit beyond the 1618 extension of wave 1 in the third wave. Okay, so we got that. Looking good for a wave 3. What did we do for a retracement of wave 3 and wave 4? Let's look at that. So we did roughly between the 50% and the 61.8% retracement here. And more importantly, we did not overlap 1 and 4. So that's valid. And then we came down again in wave 5. And when wave 3 is the longest wave in the sequence, wave 1 and 5 tend toward equality. Well, let's just see if we're close to 1 versus 5 equality. So the length of 1 off of 4. And we'll debate. It won't make much difference, but I'll show both of them. Whether we call 4 here or 4 here. Okay. So if we call 4 ended here, we got, well, we're right around the 5 versus 1 equality level, and roughly the same if we drag it over there, okay? So to me, you have a pretty good, you know, high confidence 5 waves down. Now we could call this for either a larger A, and then looking for a retracement up in B, and then a C down, right? Or, and I'll just throw it up there. Hang on. Just bear with me while I throw some text up here. Okay. So 5 down for either A or a 1. We're looking for a rally up in B or 2, and then down in 3 or a C. And let me just get this out of the picture. Get this degree up to match. Okay, so this is what I'm thinking here. So 5 down for A or 1, and then we'd be looking at a partial retracement of this decline. Something like that. I mean, there's various corrective patterns it could take, but right now we'll just project a little simple ABC up in either a B or 2, and then we're looking for another 5-wave decline below the lows of this A or 1 in either a C or a 3. Okay, so that's kind of the roadmap I think maybe into next week we'll be looking at. And in fact, I mean, let's just see how long this in time this took here, this decline from our September 2nd high. Okay, so right there, and let's just assume that the low was put in today, although it could certainly go a little lower early next week. But let's just pretend that today did mark the low in SPX. So if the B or 2 just had a equal duration to this initial move down, that would take us early October, okay? Now, there's nothing to say that wave 2 can't be a little faster pace and then we roll over again before that, but just to get an idea, you know, this probably will have to chew up some time, this recovery, before we should be looking at a potential downside setup. So really what I'm looking at here, I mean, even if you're wanting to be a bear, it certainly doesn't look like a good entry point. And I would argue even a, you know, a bearish bias should allow for a significant partial retracement of this move down we've had. And then if it looks right, okay, if we don't just keep blasting and, you know, if it doesn't just look like it's, you know, imminently going to make a new high, and we start encountering some resistance, you know, we'd throw up some fib retracement levels and that sort of thing. And obviously we'd have a pattern to work with once it got underway. I'll get rid of 38 too, because it'll probably go well beyond that. But see, if we just got to this previous 4th wave area, which would be a pretty common retracement level, that would also be the 50% retracement of the initial move down. So that's kind of a nice area. 44, mid 4480s, maybe closer to 4500. Well, 4500 would be the 618. So that's a nice zone to look for maybe next week or beyond. And there is a Fed meeting next week. And often you see, especially after we did our little, you know, sell off into the expiration Friday, would not be unusual to see a rally up into the Fed meeting. And then maybe we tank. Maybe the Fed actually does the right thing and starts tightening things up instead of pumping the shit out of everything indefinitely. I wouldn't hold my breath, but if they actually do get serious and say, hey, wait a minute, inflation actually is a problem, and, you know, making all the wealthy asset holders even wealthier and nuking the US dollar, that's maybe not the best thing for the population. Well, we'll see. But I think that would just be a nice coincidence if the Fed finally does actually start some sort of even indication of tightening, and then we tank on that. That could be interesting as far as the timing goes. But most important, of course, is the pattern, and, you know, at least we got something to work with here. So I'd say short term, a long trade is certainly warranted, but I would only be expecting a partial recovery of this move down, and then be looking for another move down in either a C or 3. But we know where we're wrong, and if we just do what we've done the last several times this year, where, yeah, start looking bearish, but we don't actually make any kind of lower lows, right? This is just a series of higher highs and higher lows. It still is. If we don't just do a partial retracement and continue making new highs, then forget about trying to be bearish, for another little while at least, okay? But for now, the bearish hopes are certainly alive and well here, especially since we have a pattern that looks pretty good to work with. So I think I've gone through really what I want to lay out here on the shorter term time frame. Just to put a bottom line on it, I think we're at or near a short-term bottom, looking for some sort of partial recovery, and then reassess and perhaps enter a bearish directional position if it looks right for that. Right now, you just need to allow for that bounce to play out before we go any farther than that. Okay. Now, SPX chart here. Candlesticks. So you can see we closed right around, slightly below actually the 50-day simple moving average, and that's also been a place where people obviously like to buy. Okay, so another thing. Okay, yeah, we'll have this kind of reactive buying at the 50-day on expiration Friday. Yes, we'll start going up, but it will be a notable change if we only go up partially. Okay, form a lower high, and then roll over again and actually take this low out, and obviously at that point we'll be well below the 50-day moving average, and maybe finally for all the moving average people, maybe the 200-day could finally be in play, which would be, well, closer to 4,100 right now. But this tendency of bouncing off the 50 on expiration Friday or thereabouts, we have not broken that tendency yet, so it'll be interesting to see, is this just going to be a partial recovery up, not make new highs, and then a rollover again? That will be a notable change in tone after many, many months of not doing so. Not confirmed yet, though. Okay, weekly candlesticks here on SPX. Okay, did we have a weekly bearish engulfing last week? Let's see. Just want to confirm that. And this candle here closed at 45.35.43. No, I mean, it's pretty much a weekly bearish engulfing, but a fraction of a point. It opened a fraction of a point too low to be an official bearish engulfing, but it certainly has that has the spirit of a bearish engulfing at least. And we have actually had some downward follow through on a weekly closing basis, but it could just be like every other time. We started to look like we were going to have something on the weekly, and then we just bounced and continued on. So it's hard not to be skeptical of the downside potential until it actually proves itself at this point. Okay, I mean, it will happen at some point, but that is the million-dollar question. When will the big one, or at least a big one, occur to the downside? Okay, Dow Jones Industrial Average. I mean, yeah, it sold off with everything else, but I don't really have much unique to say about it. It looks like the 50-day simple moving average has a lot less relevance on the Dow. Multiple times we've kind of stabbed below it, then come right back up. So I don't know if this time will be much different or not. Again, it'll matter when we bounce. Is it just a partial recovery and then further down lower lows? Because that will be a notable change. Weekly chart here on the Dow. Not much to remark on there. Okay, let's get away from the Dow anyways. Nasdaq Composite. So the Nasdaq Composite, yeah, it's not a whole lot different looking than SPX. Even on the the shorter term time frame, say like a 30-minute here. I mean, I think you can get a 5 down out of this. I mean, this could easily be the 1, 2. Maybe call this the 3, 4, 5. And maybe the Nasdaq already bottomed a little earlier, at least the composite here, and we're doing like a ABC up for W, ABC down for X, and maybe an ABC up for a Y, WXY for either a a B wave or a 2 wave. But largely kind of lining up with what I see on SPX. We got this initial move down, looking for a partial recovery up, and then ideally another move down, and then we'll gauge what kind of magnitude correction we're actually going to get if we get it. Okay, so that's the composite. VIX. VIX, yeah, we've got some little upside action here in VIX, but nothing that would at least convince me that we're doing something big yet. Okay, we're well below previous, VIX spike highs, which weren't particularly powerful in their own right. So not much there on VIX. Now on the VIX VVIX tool, we did get a good sell signal over here. So we had the VIX VVIX divergence. VVIX got above the red moving average. I believe I pointed this out in my video a little while back there. So yeah, VVIX got above the red moving average. SPX got below the blue moving average, and you can see we got a pretty good move down in SPX. Although I think it's nearly complete, at least this initial move down. And you can start to see some signs of that. So this works in both directions for buy signals and sell signals. So now we have a, you can see that VIX, well, VIX hasn't even quite come up and made new highs relative to this high, even though SPX has made new lows, and VVIX looking even weaker, right? So that's what you would want to see at an SPX bottom. You'd want to see VIX and or VVIX not making new highs as SPX grinded out lower lows, which is exactly the position we find ourselves in here. So this would suggest that we're likely right about to bounce here. And then again, we'll have to assess what that bounce looks like and where it kind of stalls out, if it does, as to whether another leg down is in the cards. But yeah, currently this is still technically on a sell signal, but it looks like it's getting ready to print a buy signal pretty soon here. And that would be where VVIX tanks below the red moving average and SPX gets above the blue moving average, which currently is around 44.57. Okay, well, that's pretty much everything I wanted to go through, I think. And, I mean, just to put a bottom line on it, at least we finally got something to work with, some reasonably clear pattern. So I would be looking for a bounce pretty soon here. You could certainly try and trade that to the long side. And then as long as that bounce looks corrective and looks like it's going to fail at a lower high, that could be a potential bearish entry at that point. But we'll have to wait and see how it develops. Anyway, we're in that zone of the year, September, October. If something, interesting or bearish is going to happen, that's for kind of the time frame it often does happen. So let's see. All right, Serial Trader signing off.